Okay, so far we have understood the materiality concept, right? Materiality we have understood the performance materiality. So if there is any factor which accounts for a revision in materiality, auditor must do that. Sir, why? Because there are many other factors. For example, here, if there is any new information that is obtained, if there is a change in auditor's understanding of entity after performing further procedures, if there is any change in circumstances during audit, auditor must account for revision in materiality. That is a very crucial step. Auditor must do this revision of materiality during the audit. It should be a continuous phase, right? He is doing some examination by audit procedures. He got some evidence. That evidence is saying that no, the materiality must be revised. So accordingly, auditor must take an action. So documenting materiality also we should understand. Auditor must document the materiality of financial statements as a whole. He should account for what is called as performance materiality, which is a lower benchmark than the original materiality number, that is 2 and 3 for particular classes, because laws and regulations says okay, for particular industry this is a very significant item. Okay, for this specific item what is the materiality number? For that also you should be accounting for as far as documentation is concerned, that is 3 and 4. Any revisions made, okay, this is the first materiality, after certain days, after certain examinations you got to understand this revision materiality, you should accordingly document the same, right? Now coming to the understanding the entity and its environment, SA 315. Sir, we have understood SA 315 basics part. What is SA 315? Identifying and assessing the risk of material misstatement through understanding entity and its environment. We have understood risk of material misstatement. What does it mean? So now understanding the entity and its environment. Sir, what is understanding entity and its environment? So for any auditor, let's say an auditor of a big industry as big as maybe Tata or Reliance, like he comes to the place of the client and he starts doing directly without any understanding of the entity and its environment. He asks for transactions. He wants to do vouching and verification. Sir, after doing vouching and verification, how will he conclude whether this is material or immaterial, whether this forms a significant part or non-significant, whether this is a related party transaction or a related party transaction? How does he conclude these items? So understanding entity and its environment is a very crucial step. That is why SA 315 forms part one of the important essays as far as audit procedures are concerned, auditing is concerned. So what is SA 315? What does it say, sir? SA 315 says identifying and assessing the risk of material misstatement through understanding the entity and its environment. Right? Now, here we are talking about the understanding the entity and the environment. Auditor must obtain understanding of 5 areas, SA 315. Here I have given a memory trick. You can remember it like INA ohm. Like it is more like 2 words if you divide it, INA and ohm. So INA ohm, you can do it that way. It is a small trick which I made it. You can at the comfort of your own understanding, you can also form your memory tricks. So these are not like this is mandatory that you have to remember this answer in this way. This is for those students who feel tough to memorize. For them only. If you are able to memorize conceptually, you are perfectly fine, right? Keywords are the key. If you are able to retain the keywords and able to put it on paper, that should be absolutely fine. Okay, understood? Okay, the first one, what they're talking, the industry, regulatory and external factors. Here, the industry, regulatory and external factors. What does this constitute? The competitive environment. The environment meaning, okay, you are in a particular industry. You are not the only one in the industry, right? You are not the only person who is in the industry, entire industry. There would be competitors. Who are the competitors? You need to analyze. Then you have to see the supplier and customer relationships, right? Okay, you are having a huge vendor base. And how is your relationship with your vendor base? Is it related parties who are existing as part of your vendors, or are the real vendors? How are the transactions, whether they are giving in fair value? All those things you should account for. Next, tech development. Sir, in your industry there could be massive tech development. You are seeing there are so many layoffs in technological industry right now because of AI. So if you are doing an audit for AI industry and you are seeing there is a massive increase in employees and not a decrease or not a downsizing, and you should evaluate, sir, why this is happening. Industry level, there are so many layoffs, but your company, you are massively hiring. What is the reason? You should account for those things as well. Okay, next, applicable financial reporting framework. Okay, you should also account for the financial framework. Accordingly, you should see whether the financials are prepared in such a framework. Legal and regulatory framework also you should consider, sir. Tax department, okay, what kind of laws are applicable, okay, whether income tax is applied, okay, what kind of rates are applied, whether they have chosen any special rates. You should account for all of these stuff, because every transaction that you are vouching and verifying, right, you should have a backup, you should have a background that, okay, this is the industry in which they are, that is why the transaction in this way. You should not ask the question at a later point of time, sir, why this is in this rate. You should also take account for tax, then whatever economic conditions, whether industry related or not industry related economic conditions, you should consider macro level also, whether the budgetary framework as far as macroeconomic conditions are concerned, whether this company is in that range or not. You should consider, sir, how the inflation is affecting this company. As a macro level, you should understand, not for a specific company level, just to give you an understanding how this industry is working at an overall level. Then interest rates also, okay, the company is having massive loans, okay, at what interest rates they are going for a higher interest rate. Why, sir? Is the credit risk is not good? What happened? Why the companies are giving or taking loans at higher interest rate? Why are the banks not good enough to give this company or the client at a lower interest rate? You should assess all those factors, sir. Next, the nature of entity. Nature of entity, sir. What does nature of entity here mean, sir? Sir, operations. In which kind of business environment it is in. What are the operations? Whether it does manufacturing or sales highly, whether it does marketing most. What is it? What is it spending its time or money or budget or resources in more, right? You should take that into consideration, sir. That is one. And next, ownership and structure of promoters. Governance structure, you should take care, right? You have the board of directors. Who are those? What are their profiles? You should understand them. You should not just see their names and say, okay, fine. You should understand whether they are matching for the background or the role that has given to him. Okay, he and so for example, a person who is in that position as a promoter, what is his competency, what is his role in the company? You should assess that. And next, types of investments, including special purpose entities. A company must be investing in different vehicles, right? It must be investing in SPVs, it must be investing in equities, debt. So you should be assessing the investments also, why it is investing, because in the end it is all stakeholders' money or the capital, right? The capital should be invested properly. You should understand what is the capital structure as a whole, then how entity is structured and financed, how much debt is there, how much equity is there. You should have that proportion in mind. What you should do, you should take all these considerations, you should document in your first paper of your working book, right? You should have it in the first sheet only, because as an auditor, before you give something like an audit program or audit process or strategy plan, you should, for anything for that matter in the audit procedure, the first process is understanding the entity and its environment. So all this come as part of understanding entity and its environment, sir. Okay. Next, accounting policies. Now comes your chartered accountant hat. Accounting policies, sir. Whether policies are appropriate for the business, sir. Accounting policies, right? Accounting policies are professional judgment oriented only, not all the time. Every company follows the same accounting policy, but these are the benchmarks, these are the best practices. If the company particularly is not following a particular accounting policy, why it is not following, or why is it following, you should have that rational, you should have that thinking hat here. Okay. And consistent with AF, RF and industry practices. If it is not having that practice as far as industry is concerned, you should question, you should take into consideration, because that might lead into a risk of material misstatement at a later point of time, sir. Okay. And reasons for any changes, you should ask them management. Okay. Next, objectives and strategies and business risks. Objectives, strategies and business risks. Okay. Now company is evolved, company is in a position, right? You are understanding the industry, you are able to get the competitors, all that stuff. Now identify the risks and threats. Okay, these are the threats the company is having, these are the opportunities the company is having, right? What are the new products, what are the business orientations, right? What is the business expansion the company is, if the company is wanting to get into a merger and acquisition, a transaction, if a company is thinking with another company to form into a synergy, what is the company's value proposition here now? Okay, you should take into consideration the long term goals of the company, right? Because each and every decision, each and every potential decision carries a risk of material misstatement, sir. Business risk is broader than risk of material misstatement, but includes it, sir. Very important statement. So all these things which I am telling you, right, these constitute something called as business risk. This is more than the risk of material misstatement, because risk of material misstatement is pertaining to the particular audit only, but business risk is for the overall macro environment. Now you as an auditor must define what is this risk of material misstatement for me in this overall business risk atmosphere, right? Auditor is not responsible to identify all business risks, for sure. Anyways, auditor is concerned for that only audit. He is concerned for the fact whether the financial statements are true and fair, whether the risk of material statement is lower. By how he is evaluating the overall entity in its environment. In this process, he is only hand picking what kind of risks that for an auditor, which elevates his audit risk, is a concern for him. Not every business risk. If operation is not working properly, and the reason is something different, which is not at all related to the audit mechanism as an overall level, why is he bothered? That is a different story. That the operating effectiveness controllers or internal control department, they should be checking it, right? He will be taking account, but he will be not bothered to test and deeply examine why this control is not working, right? Because if it is not affecting his risk of material misstatement ratio, he is not bothered at that much level, but he will consider all the parameters because he is understanding the entity and its environment as a whole. Okay, next point is measurement and review of financial performance, KPIs, right? Financial and non-financial, period on period analysis, variance analysis, departmental reports, budget reports, credit rating agency reports. These are all the factors, these are all the external reports, these are all the management defined reports which will help the auditor to get a comfort level as to how the metrics are there. Right? Okay, if there is any deadline, whether the company is meeting the deadline, how pressure is managed at the company level, how the ratios are there, how much variance is there from profit from last quarter to this quarter, from last year to this year, how much revenue is changed, how much operating expenses are changed, how much GST is levied, how much GST output is paid this quarter rather than the last quarter. All these metrics will help the auditor understand the entity and its environment, sir. Okay, very important. You can remember with this trick INAOM. I stands for industry, N stands for nature, A stands for accounting policies or selection and application, right? And O stands for objectives, strategies and related business risks. M stands for measurement and review of financial statements or financial performance, right? Okay, got it. So let's move on to the next topic, sir. So far we have understood about SA315, understanding the entity and its environment. Very good, sir. Now coming to internal control, very important, a core concept. Okay, sir, internal control here, two words, internal control. What is a control? Sir, control can be understood in this way. Control is a check. Is a check for what? To mitigate the risk that you have anticipated. But here they are saying internal control means internal control. It is the management's control. It is the management's control to ensure all risks are mitigated in place, right? These are the controls that are designed, implemented and maintained by whom? Not the auditor, by those charged with governance, also called as TCWG, management and other personnel, to provide what? To provide reasonable assurance about achievement of entities, objectives regarding what? First, sir, reliability of financial reporting. Sir, in the end, your balance sheet and P&L is what you are concerned about, and you don't know why this number is existing. That is when you are checking internal controls provided by management. Okay, if a particular expense is recorded, how is it recorded? Whether there is two-step recording or not. What do you mean by two steps, sir? Okay, the clerk is recording expense A. Whether that is verified by supervisor, after verification by the supervisor, whether the management is reviewing, then only that number is going to the books of accounts and it is routed to P&L is what you should see in internal control. If that is done, automatically you will have comfort over that line item. That is how internal controls are placed, and auditor will get understanding about those internal controls, and then he will give his idea as to how risk of material misstatements exist in the company, sir. Okay, that is one. Second point, effectiveness and efficiency of operations. For any client, for any company, sir, operations are the key. But if operations are only not there properly, if operations are not operating properly, the effectiveness is not there, automatically your company as a whole is disrupted, is not working properly, is not functioning properly. You as an auditor must understand the walkthrough, the mechanism of the operations. You should gain comfort over those internal control as well. That is the objective management has to take care of, not you. You as an auditor has no involvement in this internal control, sir. You will not prepare, you will verify, you will gain comfort. Okay, this is management who's preparing internal controls to reduce their business risks. It is not for you as an auditor. They are able to reduce your risk of material misstatement. Business will have business risk to be reduced. Management will make internal controls. You as an auditor will rely on those internal controls to reduce your risk. Your risk is nothing but audit risk. What is audit risk? Risk of material misstatement into detection risk. Understood? Get into the cycle. You'll be able to get every answer, every concept right, sir. Okay. Third point, compliance with applicable laws and regulations. Okay, these internal controls must also be targeting the laws and regulations. The statutory duties all must be taken care of. In next 4, safeguarding of assets, intangible, tangible, both. If your assets, what is the definition of asset? Assets are capital in nature. They are in balance sheet. Why they are not in P&L? Because using those assets, company will generate the revenue, company will get money using those assets. Assets are your catalyst, right? Assets are something which you will use and you will receive benefits from that. So you should safeguard those assets because they will be key. There will be a key factor. Correct. Now that we are talking about benefits and limitations of internal control. Okay, what are the benefits? How does this internal controls benefit the auditor? It benefits the auditor in identifying types of potential misstatements, right? You understand the internal controls, you'll be able to see which are the areas where more controls are there or less controls are there. Accordingly, you will be targeting the potential misstatements or gray areas. That is one. Second, identifying factors affecting risk of material misstatement. That is the thing which we are telling you, right? Company will define business risk, but you will define what is called as risk of material misstatement at a financial statement level, which will form part for your risk of material misstatement. That is second, sir. Designing nature, timing and extent of further audit procedures. It will help you to define your risk of material misstatement and again help you design your further audit procedures. Okay, you have placed all your audit procedures as per standard and now you are not having a control, not having a comfort over a particular mechanism. Now what you are doing, you are putting further audit procedures in place so that you will have comfort over such things. So it helps auditor in designing the nature, extent and timing of further audit procedures. So these are the benefits, sir. Important, conceptually understand, sir. Everything is easy. Next, limitations of internal control. Here, as I told you, internal control is done by the management and they have certain objectives, right? In these objectives, they are providing high level of assurance or full assurance. High level of assurance. It is also giving reasonable assurance. So it is not absolute. So auditor must still not rely 100%. He should exercise his professional judgment and also has to do further audit procedures to get more comfort, sir. That is one limitation. Second, human judgment and decision making can be faulty automatically when management themselves are coming into picture and they are saying this is required, this is not required, this is risky, not risky. You might feel out in a different way, right? So automatically when human decision is involved, you should be more careful, right? That is the second point. And lack of understanding the purpose of control. Lack of understanding the purpose of control. Listen to me, sir, carefully. You have placed the control carefully. You have placed the control and you are not really sure whether the personnel, whether the employees, whether the management or the functional level employees are able to really understand or comprehend to the risk, to the real risk. They are not really understanding the control. Why is it placed? They are just doing it. Or even if the control is lapsed, they really don't care. So it is a limitation, because you at a management level is thinking that something, you have different thought process, different business risks in mind. But not every control that you have put in place will actually mitigate such risk, right? That is an important limitation, sir. Collusion among people or management override. Management define on control. Again, they will only, because of their different problems or whatever that may come in between, they will only override such controls. That is a serious control lapse, sir. You as an auditor must be absolutely watchful for those scenarios. Okay, if a company is having a particular control and they're not following that control and their control is lapsing, why that control is lapsing, why management is overriding the control. Management override controls is one of the important point for which frauds happen, sir. Frauds happen due to management override control so many times. You should be very much careful. Understood? Okay, next, judgments by management on an extent of controls. The same thing which we discussed. Small entity, segregation of duties not practicable. Okay, every control is managed by a single person, single end personnel. That is not right. You should have segregation of duties. You should have segregation of duties for what? Because everybody is independent and together forms part of an entire control procedure. They will not be able to lapse a control because they don't have control of different procedure which is handled by somebody else. If every control is handled by single personnel, he can do overriding of such controls, sir. Understood? Very important, sir. Okay, students, let's understand the components of internal control. So far we have understood the internal control, the benefits of internal control, what are the objectives of internal control, what management will do to mitigate the risks. We have understood. Now let's understand components of internal control. For this, the memory code I have given is crime. It is easy for you to remember. Crime. What does crime stands here? C for control environment, R for risk assessment process, I for information systems and communication, M for monitoring of controls, E for entities control activities. All five are very important for you to understand the concept. Questions can be asked on this. You should be able to get the concepts right, able to retain the keywords. Okay, at least remember all these five for sure. Components of control environment, what are those five? Crime, C-R-I-M-E, C for control environment, R for risk assessment process, I for information systems and communications, M for monitoring of controls, E for entities control activities. So, okay, let's understand the control environment, sir. Sir, control environment here means how the management has set up the control framework. So you should think it of like a framework which management has set up. So we can call it as control environment. Okay. Here, what are the points? Communication and enforcement of integrity and ethical values. Right? You go to any company now. The first point they talk is about integrity and ethical values. Why? At the tone from the top, if you get integrity and ethics, and if you are speaking about culture, automatically the functional level or the ground level will follow that. You are as good as your top management, because whatever top management projects, you consume them. So the first point, communication and enforcement of integrity and ethical values, whatever controls that are placed by the management at the top, the culture and ethics should be so and so that the functional level employees or the ground level or the middle level, everybody are taking them and following them procedurally and with integrity and with ethics. That is the first point. Second, commitment to competence. You are not just doing it, you are master in doing it. Your functional level is experts in doing particular control. Right? You have appointed those personnel who are good at it, and you are asking your team to be better at it. So you are asking for competence, right? It is not just normally you are coming and adhering to the controls. No, you are adhering to the commitment to be competitive. Competitive as to what? Competitive to make sure that you are well and deserved enough to make sure the controls are in procedure in place in the overall environment is perfect, right? That is the second point. Third, participation by TCWG. Sir, tone from the top is fine. Whether the management or the higher level, are they following? Are they showing principle in action? When principle is action is there, automatically you are more aware, you are more informed, you are more alert. Array, management is only doing, we should also do. You should have that kind of a framework or environment. And fourth point is management's philosophy and operating style. Every company has got a culture. Every company has got a different style of working mechanism, and that mechanism changes whole lot of things, sir. If a company is having empathy towards employees, automatically the employee will have loyalty. It is vice versa, right? So your mechanism, way of operating defines a lot about your control environment. You are not paying employees salaries on time. How would you expect the employees to be vigilant and careful or watchful? Right? Your culture is very much important. That is what management's philosophy and operating style. And next part, organizational structure. How is the organization as a hierarchy is there? Is there too much control or is there too much of under control? Who is taking the majority of influence? What is the style? Whether is it very concentrated or there is democracy that is involved? You should carefully assess that as well. Next, HR policies and practices. HR policies and practices, very much important. You understand, right, sir? Human resources are the asset, are the main function for any company. If there are no employees, how would the company run? So the HR policies and procedures, what are the best practices for the employees that are given by the human resources team, you should also assess. That forms to the overall assessment to the control framework or the control environment. And next point, sir, assignment of authority and responsibility. Who are your performers? Okay, who is safeguarding assets? Who is the person? You should be able to assign them properly. So these all constitute to what is called as control environment. Right? Control environment, think it of this way as I told you. It's a framework. It's an overall framework. How the environment of the controls existing. When you understand the environment is good, automatically internal factors will be more better or they will be functioning better. If the control environment is only not good, automatically that is itself a red flag. There's no need to deep dive. You are able to sense from the outer layer only. Okay. Satisfactory control environment is a positive factor, but not an absolute deterrent to fraud. See, you are having a first level of understanding. That is your highest round. Then comes inner circles. When the highest circle, if you are not comfortable, automatically you have so many questions. But if the highest circle is good, then you should come and deep dive and check. Not like, okay, that circle is fine, everything is fine in the end. No, sir. It is a positive factor, but you should check the other things as well. But if the highest circle itself is not good, then there is a high chance that it might lead to fraud, because lapses in control environment, a failure in control environment, a bad control environment will automatically lead to easy fraud, sir. Understood? So make sure if your control environment is good, go to next step. It's a flow chart. If your control environment itself is bad, then have the eye of watching. There could be a chance of potential fraud. Understood, sir? Okay. Next, coming to entities risk assessment process. Company entities risk assessment process. So risk assessment process, as we understand, they are talking about risk of material misstatement for us. They are talking about overall risk assessment. So this risk assessment process is for the company, not for the auditor. So just to make sure that you are in the right action, right understanding, right? This risk assessment process is not for the auditor, it's for the company. The management is doing here. So auditor, what he should do? He must check if entity has a proper process to manage what? To manage the risks that are related to what? Business, overall business. No, sir, it is related to financial reporting. Here auditor is concerned about financial reporting. This risk assessment process is for the company as a overall, but auditor must check if this processes, if there are any processes that are implemented to adhere to this risk assessment as far as financial reporting is concerned. Okay, entities process must cover what? Spotting business risks that can impact financial reporting, whether these are there in place or not. auditor must check. Gauging the size and significance of those risks. Okay, if there's a particular risk, you should be able to, as an auditor, must define what is the significance of such risk and how much it will lead to risk of material misstatement. You should assess, sir. And third point, estimating how likely they are to occur. When management is designing this process, right, risk assessment process, they should also put a viewpoint as to how likely, what is the probability of their occurrence also. This would help the auditor determine the chances or likelihood of risk of material misstatement at a financial statement level or at an assertion level, sir. Okay, next, deciding on actions to address them. Okay, you identified risks, you identified potential risks, you identified these are the red flags, these are the gray areas, you identified as far as financial reporting is concerned. Now, what are the actions? Whether the company is having those actions that are there or not. These are the few things the auditor must check as far as entity's risk assessment process for financial reporting is concerned, sir. So this process forms basis for managing risks. It helps auditor identify risk of material misstatement, as I told, right? Risks arise or change due to what could be the reason, sir? Change in new technology, new business models, products. There is a new product that has come in, or there is a new advancement. There is a depletion of old products. There is a change in operating environment. There is a change in industry laws and regulations. There is so much, sir. So accordingly, we must also be careful. We must also be careful for what? We must also be careful that risk assessment process of the entity for financial reporting is properly followed. The process is documented. Auditor must evaluate all of them, sir. Okay, understood? Sir, coming to information system, business processes and communication. Auditor must understand the entity's information system relevant to financial reporting. Here in entity's risk assessment procedure, what auditor must check? Auditor must check if entity has a proper process to manage risks related to financial reporting. Here, auditor must understand the checks for what? Of entity's information system relevant to financial reporting. Sir, every place, auditor is not concerned about overall entity and overall business risks. Auditor must understand overall entity, but his risks are pertaining to financial reporting. He must be vigilant and careful for those, because if he is putting everything, every watchful area, every significant area which is other than for financial reporting also, if he is giving his time there, then when would he give sufficient appropriate audit opinion on financial statements, right? So auditor's first duty is to understand entity's information system relevant to financial reporting. Not just this, any control procedure which is prepared by the management, which is designed and approved by the DCWJ management, auditor must evaluate all those processes as far as financial reporting is concerned. Understood, sir? Okay. Now, what is this information system, business processes and communication? Right. 6 key areas auditor must understand. What are the types of transactions significant to the financial statements? That is one. So, which means classes of transactions. What are the types of transactions which are significant to the financial statements? Okay, these are recurring in nature, these are repetitive, these are risky in nature. What kind of transactions auditor must evaluate? That is one. Second, how transactions are started, recorded, processed, adjusted and posted to GL. As I told in the beginning, right? If there's an accountant who's recording an expense, how is it recorded? Whether it is recorded and it's approved, whether it is recorded and supervisor is taking into charge and taking review, and management is doing further review and it's going to books of accounts, then thereby going to B&L and balance sheet. How is the process? You should understand that process. That is a business process for your financial reporting, sir. And third point, related accounting records, supporting documents and specific amounts used or accounts used, right? Okay. Specific accounts, right? You are using a particular classes of transaction, you are opening a separate account. Why these accounts are used? You should be able to take them into consideration and evaluate, sir. Okay, that is again your business process. You should do all these checks because you should gain comfort over those controls which are put in place by the management. These all, if you understand, if it will reduce your risk of material misstatement for financial reporting, sir. Okay. Fourth point, how significant events and conditions are captured in this system. Significant events. There could be different events, right? For example, significant events are those events which are not recurring in nature. For example, there is an M&A. There's a merger and acquisition that is happening, and now there is an entire restructuring of the balance sheet. How these are accounted, whether there is a framework already designed, who is supposed to be the in charge, how many timelines, what are the frameworks used for the significant transactions or significant events, how the company is taking accounting for. You should take these into consideration as well. Next point, the financial reporting process used to prepare financial statements. What is the process? You know for the fact management need to prepare financial statements as per applicable financial reporting framework, AFRF, right? But what is the reporting process? Whether it is documented, what is the interpretations, what is the procedure document, whether these are documented in right spirit or not. What is right spirit, sir? Whether these are properly documented by taking principle in action, which means whatever that is documented, whether they are followed rightly or not, auditor must evaluate, because these affect the values that are in the financial statement, sir. Okay, controls over journal entries, including non-standard and adjusting entries. Auditor must evaluate the journal entries which are non-standard and adjusting entries also. There would be very risky journal entries. There would be recurring journal entries, one-time journal entries, adjustment journal entries, moving from one account to another account. There would be those journal entries. You should carefully evaluate why these many transactions are posted on 31st of March. What is the reason? Why these many journal entries? Why is the process like this? You should evaluate everything, sir. Then only you will be able to understand and gain comfort over information system, business processes and communication of the entity as far as financial reporting is concerned, sir. Okay, understood? Here, information system means infrastructure plus software plus people plus procedures plus data. So information system is not just a one source, it is a combination. It is a combination of how many sources? Infrastructure, which means the technical infrastructure, hardware and software both together, and software plus people plus procedures plus data. Quality of systems generated information affects management decisions and reliability of reports, because system generated reports, it might give you the picture, correct, but how the information is generated in the report, you should have comfort of that. What is the inside process? You are getting a number which is system generated, which is automated, fine, but what is the control? Who is checking? Whether there is a two-step checking, who is the reviewer, who is the checker, who is validating it? You should have those comforts in place for those checks, those controls in place or not. Then only you will be able to rely on a system generated report. Next, communication forms, policy manuals, accounting manuals, memos, electronic oral actions of management. These all forms part of information system only, sir. Your memos, your policy documents, your accounting manuals, your instruction manuals, walkthrough procedures, all these form part of your information system only, right? So far we have covered how many, sir? We have covered 3. Crime, we have covered control environment, we have covered risk assessment processes, we have covered information system and communication. Now let's go to monitoring of controls and entities control activities. Right, sir? Able to follow me? Right? Okay. So coming to control activities, right? So far we understood the control environment. We are able to understand the information system, business processes, and we have understood entities risk assessment process also. Now coming to control and activities. What is control activity, right? Policies and procedures that ensure management's directives are actually executed. Now you have prepared everything. You as a business owner, you have prepared everything. Now there should be procedures or checks in place whether these manuals, these instructions, the instructions which you are giving, which are called as controls, whether they are followed in real time or not. You should check that. You will be doing it by understanding the control activities, sir. So auditor understands only those control activities relevant to audit, linked to significant transactions, account balances, disclosures and relevant assertions. Not for everything. He wouldn't, as I told you, he wouldn't do for entire business as a whole. He is interested about those matters which affects the risk of material misstatement, which is pertain to financial reporting and overall financial statements. So what are the type of control activities? 1. Performance reviews, actual versus budget, trend analysis, prior period comparisons. Every business must do because that would give you an understanding. Okay, you haven't done a control in the past, now you are executing the control. What is the benefit factor? What is the comparison? What is the metric that you are achieving here? You should be able to see that. So performance review is a first and foremost important one. Second, information processing, arithmetic accuracy checks, right? Program change controls, edit checks. Okay, before the controls, you are not able to see the exceptions. Now after the controls, you are able to see the exception reports. Before, there are no exception reports, the management is not aware. Now after the controls in place, there are edit checks incoming, there are exception reports. Now management in first hand only eliminating those exceptions by mitigating those errors in place. And now what are they ensuring? They are ensuring arithmetical accuracy, they are ensuring proper validation of numbers that are in place, they are ensuring all the exceptions are answered with a proper and sufficient rationale. That is second, which is nothing but information processing. Third point, physical controls. Okay, your assets are there, whether they are safeguarded, how they are safeguarded, whether you have installed a security camera, right? Who is having entry? Not everybody is having entry, right? Because few accesses are to be restricted separately, because only required personnel to visit such environment, because they know what they are supposed to do in that environment. Everybody and anybody, you and I can go to that assets place, and if we are doing something, and if we are damaging the products, damaging the assets, that would not be right, sir. So management is putting the control. Okay, if proper biometric is there, if the CCTV is there, the locks are there, safes are there, restricted access is there, all these are important. And that comes to third one, physical controls. Fourth point, segregation of duties, sir. As I told you, if one person is doing all the activities, there definitely could be a control lapse, sir. There definitely could be a control lapse. So auditor must be checking whether there is segregation of duties. Why segregation of duties? It will give an independent accountability to the employees, to the functional level people who are doing different tasks, and together it forms to an entire control, right? Segregation of duties is an important element because it gives you the accountability and independence verification. You are not managing the other task. Other task is managed by different person. Now you don't have complete view as to what is other task. You are doing your own task. The other task, if it is moved, then what is the first understanding? The first task is properly completed. So every task will have a checklist now. Okay, task 1 completed, now coming to task 2. Task 2, different person is handling. Segregation of duties will play an important role. So what are the 4 points here which we learned? Performance reviews, 1, and 2, information processing, and 3, physical controls, and 4, segregation of duties. Segregation of duties, important points, sir. If they are asking about segregation of duties in exam, like a case study or a normal question, you have to be able to explain why segregation of duties, because it forms part of the control activities. It forms part of the control activities, right? Important, sir. Control activities, which is why given here a star. So far, what we have learned about components of internal controls, control environment we have learned, risk assessment process we have learned, information system and communication we have learned, entities control activities we have learned. Now comes to monitoring of controls. Now why monitoring of controls coming in last place? Sir, you have placed the controls, you know now the controls are there, the business processes is there, the control activities are also in place. How these are monitored, how these are checked, right? So what is monitoring of controls? Monitoring of controls is nothing but ongoing process of checking whether controls are actually working effectively over time. You have placed a control, after 5 years also you are just relying on the same old control. Are you monitoring, are you updating, are you enhancing the controls by passage of time and passage of different significant events that happens in the company? You are monitoring the controls, you are updating and re-enhancing your controls, you are checking whether those are effectively working, because you must have a separate intention. Okay, this control will bring this metric, this performance will be different, this variance will be understood. You have made a control for a reason. Whether that reason is properly getting sufficiently understood or that reason is getting lapsed, we should be able to take an account for. That is the reason why monitoring of controls is very important. Check if controls are operating as intended. Check if controls need modification due to changing conditions. Involves taking corrective or remedial action when gaps found. So this is like an audit in itself. right? So internal auditor generally does these kind of checks. He monitors the activities in the control environment. He assesses all the components of internal control. What he does, he gives suitable areas of improvement. Okay, this control is not working, this control lapses, these are the controls where the result is not as expected. So what management has to do? Management has to revisit and entirely modify or think to either remove it or get a new control or replace it. So auditor must check whether the monitoring of control activities are in place or not. How management monitors? Ongoing monitoring, built-in day-to-day activities, supervision, management reviews. Management will get reports. Management will get MIS reports also. In real time they'll be able to see, okay, this is functioning right, whether the two-step verification is going right, whether the spot checks also management can do to do this monitoring of activities. Separate evaluations, periodic independent assessments, as I told, internal audit is done. Or they can hire an external engagement also, which is an assurance engagement in itself again. They can hire a company, they can hire an auditor who are doing the checks of the controls in place. They are not doing the financial reporting, they are not giving assurance for the overall financial statements. No, they are assessing and giving an opinion on the internal controls which are in place. They are assessing the control environment. Management can do that such thing as well. They can do a quarterly, they can do a half yearly, they can do biannually. It is up to the management and how much they are risk prone, right? That is an important factor. So what are the 5 IC components? What are the 5 internal control components? What is the memory tricks are here? Crime, C-R-I-M-E is crime. C for control activities. C for control environment, which we read here. What is it? Control environment. R for risk assessment process. I for information system and communication. M for monitoring of controls. E for entities control activities. Right? Very important. The control environment, risk assessment process, information system and communication, monitoring of activities, control, entities control activities. Right? All these 5 very important, very much important for your exam. Read it, understand it, get the concept. Okay, these are revision videos, these are not full-fledged videos. If it is a full-fledged video, I would have taken maybe 20-30 minutes of time for each component, but because I can't do it, or maybe even hour for each component if that matters, because there's so much to learn in detail. But for now, for your exams, if you're able to retain and you're able to understand the concept at a high level, you're able to justify why this component is there, that is enough for your exam, sir. Okay, audit is not a subject where you are learning and you are able to get the concept and you are like, fine, you should also read, you should also memorize, you should get the keywords right, sir. Okay, trust the process, you will do well, sir. Okay, fine. Stay committed, stay positive, trust the process, as I'm saying again. It is always easy for me on the other side to say exams are coming, you should prepare well. I know how much tough it is to face an exam, how much tough it is difficult to prepare. I have been there in your situation, I can understand. So all you can do is trust the process, really believe in yourself, and results will definitely come. Okay, thank you, sir.